Yeah, what do you think? I mean, how much impact do you think that the Fed Reserve Chief Ben Bernanke's speech has had as well on markets?
I don't think it's had a huge impact. We've seen the Australian market move higher modestly this morning, but there's not a lot driving the market today. You can see that the market, after rising, has traded within about a 7-point trading range, so a very narrow trading range today. That's only about 0.15%. So as I said, there's not a lot driving the market, so I think that's why we're seeing a bit of commentary around Ben Bernanke's speech this morning. I think really what the market was focused on there was, in particular, was quantitative easing. We've seen the quantitative easing help risk assets over the past year or so. It's certainly contributed to the 2012 performance of equity markets. And looking at the Australian market, one of the biggest effects that quantitative easing can have on is actually commodity prices, which is important for the Australian market. Even though our miners have dragged over 2012, the biggest four miners on our market do make up around 15% of the ASX 200 market capitalisation. So having a look at a few charts of 5-year charts of a few markets. If you have a look at the copper price, for example, you can see here quantitative QE1, QE2. You can see how the copper price rose through QE1, rose again through QE2. You can have a look at something like the S&P 500 index through QE1 here. It rose through QE2, rose here as well from 2009 through to 2011. And quantitative easing, I suppose, part of the purpose of this, or most of the purpose, is to drive down interest rates in markets. If you have a look at the Treasury yields in the US, 10-year Treasury yields for bonds, you can see here that actually they would fall coming in on expectations, but it actually rose through the period of quantitative easing in both QE1 and QE2. But you can see that those rates have slowly trended down over the longer term. So probably in the shorter term, these rates have been more driven by economic expectations and economic data. But I think for the rest of the day on the market, what we will be watching out for are those Rio Tinto numbers.
Yeah, absolutely. Also, of course, just watching stock movers, as you're mentioning there, Paladin Energy has been an interesting one, and up about 3% or so at the moment. What's driving this? Is it, you know, the further takeover activity in the uranium space? I mean, is there any chance that Paladin could be a takeover target?
Well, it was up as much as 5% this morning in trade. It's pared back a little bit, but yes, I think this action is based on takeover speculation. We saw overnight that Russia's AMRZ has bought Canada's Uranium 1. So Paladin has a listing on the Canadian Stock Exchange. That rose very strongly on takeover speculation overnight. And I think there's some speculation we're going to see further consolidation within the uranium space. And Paladin certainly has been flagged as a takeover target. I think the significance of this, if you look at this takeover overnight, Uranium 1 in Canada was one of only 5 listed pure play uranium producers. And after this takeover, it actually only leaves 2 pure play uranium producers with a market cap of over $1 billion, that being Cameco in Canada and Paladin here on the Australian market. So I think this really does further strengthen the case for Paladin as a takeover target. And I think Russia moving forward is going to be very important in the uranium space. If you look at that space at the moment, they've got around 33 operating reactors. That makes up around 17% of Russia's energy production. And with growth expected to increase around 50% through 2020, that's going to rise to about 23% of electricity generation. So that's about 3 new nuclear reactors in Russia per year over the next 7 years or so. So for this growth, if you couple then with the expected demand coming from the likes of China, India, South Korea, etc., you can see that demand is going to rise for uranium moving forward. Looking at China alone, this is going to be one of the biggest drivers within the uranium space. At the moment, they've got 15 reactors in operation, but then looking forward, they've got another 26 under construction and then another 51 under planning at the moment. So a huge rise in nuclear reactors within China, and they're going to need supply, obviously. So established uranium producers such as Paladin, Cameco, etc., that do have strong production already in place, and given that they're very, very cheap at the moment, they've been beaten down significantly valuation-wise. Now would be a good time for some of these consumers of uranium to start looking around to secure supply.
Just another one I know you're watching, and Bradken, I mean, it's down by about 3% today, even more actually now, nearly 3.3%. Broker downgrades there. What are your thoughts on the outlook for Bradken?
Yeah, it's down over 3%. Credit Suisse has downgraded it to neutral from outperform. And this is probably a fair call looking at Bradken, because in the shorter term, I think the risk to Bradken's earnings is certainly to the downside at the moment. Because if you look at what Bradken's business is leveraged towards, mining production volumes, the capital expenditure cycle within the mining space. It's leveraged to the Aussie dollar because it does make a large amount of earnings offshore. It's also leveraged to raw materials and labour costs as well because it does manufacture steel casings and it is susceptible to labour shortages, which can push up costs there. So looking at all these factors that Bradken are leveraged towards, they haven't really been moving in favour of Bradken's business in recent times. Looking at revenues moving forward, particularly within their industrial products division, might see a little bit of a gap in earnings in the shorter term. We did hear comments from them at their annual general meeting back in October that their order flow has slowed a little bit. They've seen some cancellation and delays in terms of delivery as some big projects have been put on hold within the mining space or even cancelled. So given the capital cycle at the moment, you probably expect some demand to return later in 2013. But in the meantime, you could see a little bit of gap in Bradken's earnings, revenues, which could flow through to the downside for earnings probably through the first half of 2013.
All right, Tim, really appreciate your analysis. Thanks so much for that.
Thanks, Bridie.